Welcome back. Boy, are we having a great conversation with Kirk Jaffe. We're talking about overcoming financial roadblocks. And during this segment, we're going to even expand it into making smart investment choices. Now, Kirk, in today's environment, and we know all the things that are happening around us, things that we don't have control over, things that are just going on in our world and in our economy. And people want to invest their money wisely. They want to move forward, but it feels overwhelming and too risky to do anything. What are the top things to consider before making an investment as facing these challenging times today?
It's a great question. It's a challenging question. I like it. I would say, again, have a strategy, principled strategy of how you're going to make your investments. Um, there's a concept called dollar cost averaging, which I think is hugely important. It doesn't matter if you're investing in stocks or a business or whatever. How much money can you afford to put into your investment on an ongoing, regular basis? The concept of compounding interest is hugely important in this kind of thinking. It
Mhm.
doesn't take a lot of contribution. It takes good compounding interest and a good bit of time, and things start to grow. And you could find even putting $100 away a month for 10 years with 10% compounding interest is going to turn into a lot of money, right? And so I think that's one of the things. If you're looking to invest a greater amount of money, say you have a couple $100,000 to invest, um, I would say it's really about getting to know the people that you're investing with, building that relationship. We take investors here when we're building our custom homes out here in Lake Tahoe, Nevada. But I insist on bringing everybody here to meet me in person. So I fly them in, I meet with them, I show them the project, I introduce them to the architects and all the people that we're working with so that they know where to find me, right? You don't want to be investing with people that are behind the golden screen, so to speak, in my opinion. So that keeps you out of trouble if you get to know people, and it doesn't mean an investment's always going to win or lose, but you have a better chance if you can see it, touch it, feel it, and really understand it, and then mitigate some of that downside risk wherever you can, right?
So, because you do things and they meet you personally, which I love that concept. I mean, I love the fact that you're saying, if you're going to invest in this project with me, I want you here. Is it better to invest in projects rather than investing in the market? Because it ain't like we're going to be able to go meet everybody that we're investing in the stock market. So help me understand how to evaluate the both aspects so I'm making the smartest decision possible.
Yeah, I've learned over the years to invest in what I understand. So when I was younger and I was a chef, as I said, I was maybe 22 years old, I was a day trader. And I was getting up every day at 4 o'clock in the morning and reading every prospectus about every company and doing the day trading and all this stuff. And I would work from, 4 a.m. till about 9 a.m. when I had to go off to the restaurant and work. And I just got destroyed. And the reason I got destroyed is because I didn't really understand this basic concept. You invest in the market. Whatever you think you're investing in today in the market actually happened probably 6 months earlier, if that makes sense. Imagine, Vicky, you work with a lot of big companies.
Yes.
Before they roll out a concept, they
Yep.
have a whole bunch of meetings and plans and budgets and thinking and higher level approvals, and possibly it goes to the board. All that happened before the thing happened that you saw on TV or read in the paper that this company is doing big things. It already happened. So I prefer to be at the leading edge of these conversations to really understand what was the thinking that went into the decision-making process. And then I can get aligned with it or I can walk away from it. Very hard to do that when you're dealing with the stock market and public companies and things like that. Nearly impossible. I read this morning actually, why is Warren Buffett so successful in his investing strategy? One reason, he owns so many big segments of the economic part of this country that he's getting real-time feedback from all his different companies. So he can see what's going on in the shipping and the railroad industries and the airline industries and the banking industries before any of us because he's getting the data real time. Well, we don't have that luxury. So I would say For me, I invest in real estate because I understand real estate. I also invest in digital currency, but really more on the infrastructure of blockchain. I believe the infrastructure is going to be needed in this country. So
Yes.
I've invested in something that I believe is going to happen, but probably not for 10 or 15 years. So I don't even look at it. I put the
Mhm.
money in and I'm waiting. Um, and that's how I do those. Otherwise, it's look for the base hits. Not everything's a home run. Be willing to invest in things that you can. If you're going to invest in the stock market, as an example, it's tough to do it. You want to be in it for at least a year, right? Otherwise, you have the
Mhm.
the real time tax
Right.
liability, right?
Right.
So you can be a day trader potentially, but really, for a normal human in this country, better to do it long term, at least 12 months, right?
Mhm.
So I look for opportunities to build new companies, to buy new companies, or buy old companies, I should say. A lot of baby boomers are selling their companies right now. These are great cash flowing assets that you can buy for the same amount you might put in the stock market.
Mhm.
So, and then you have a cash flowing situation that you can get that money to continue to invest in different places. So I buy companies. I look for things that I know, like real estate, which I'm an expert at. I really understand those things.
Mhm.
And a little bit of forward looking, what do I believe the country needs down the road? And that's pretty much my principles on how I invest.
Wow. What are some of the smart investments people often overlook that they should be paying attention to now that we're talking about how to make those investments?
Yeah, I think that the highest yielding investments are the ones that are the most boring, right? So,
Wow. Explain that a little bit further when you talk about the most boring. I think that's very interesting.
right? So think about, waste management, right? A huge industry,
Mhm.
uh, not very sexy, kind of
Right.
dirty, right? Um, but it makes tons of money, and everyone is going to keep creating garbage. So it's going to be an ongoing problem,
Right.
right? Anything in the waste management industry. Uh, house building, again, I think one of the things that we buy are landscaping companies
Hmm.
because the grass is going to keep growing. The trees are going to need to be treated, right? AI is not going to solve the landscaping business problems, right? And by the way, neither did artificial grass. Out in California, I lived in California 25 years. They encouraged people to put in artificial grass to save water. But then 15 years later, they came back and said, everyone has to take the artificial grass out because now we found out it's causing cancer. So, you know, I prefer just regular old grass, right? And we'll mow it and we'll take care of it. And that's the best thing. So I look for those opportunities that are not pie in the sky. Um, there's always people coming around going, I got the newest, greatest AI concept, or I got the newest, greatest, disruptive concept. It goes into this idea, and I know you'll appreciate this, Vicki. You got, sneezers, early adopters, late
Hmm.
adopters,
Hmm.
never adopters, right? And that
Yep.
bell curve that goes with it.
Exactly. Hmm.
I'm not a sneezer. I'm a late stage early adopter. Is kind of where I sit in that cycle. So people come to me all the time with new ideas, and I just thank you. I'll keep an eye on it. I'm probably not going to be your type of investor for a little while until I see some things line up. So again, principles.
Yeah. And again, I love the principles that you're giving as a foundation because I too believe in the fact that if you're going to growth, and I'm all about generational wealth. I'm all about wealth building. I'm all about, seeing things grow and develop and help the community, et cetera, as we're moving forward. But I also believe that it's important that when we're doing an investment, that we also look at a portfolio of investments. Now, to that point, I'd love for you to leave with my audience some things about how to create a strong investment portfolio, even when you're first starting out. I'm just getting started. Let's pretend I'm just beginning and
Yeah,
doing this portfolio. What would you say are some of the things that you want to make sure that you do to create a strong one?
exactly. And this is a great question. There's a couple of different ways I can think about this. One is I look at investing like a chair. So you've got four legs in your chair. You want cash, and to me,
Mm-hmm.
cash is cash, stocks, bonds, all that's cash at the end of
Mm-hmm.
the day for me. You have
Mm-hmm.
businesses, you have insurance, and you have real estate. So in building a long-term investment portfolio, balance your legs. You don't want to be too heavy on the cash side because the insurance side could fall over if you're missing that leg of the chair. So you want to build things up in a reasonable way. Also look for cross benefits. There are benefits in the real estate industry and owning businesses that are, contradictory, if you will, to what you find in the insurance industry, or just the straight cash industry, being stocks, bonds, and short-term earnings and cash earnings, right? Also W-2 income. Um, so I would say balance that share out is the first thing. The second thing is have a short, medium, and long-term vision for any portfolio. So if you're buying bonds, they call it laddering. And it's this idea of buying bonds that come to maturity at different times. So there's always another set rolling over that can be withdrawn from that investment piece, or it can be rolled back into now the lower rung of the ladder and keep growing. Um, I love the idea of laddering not only bonds but also businesses, and having that long-term, medium-term, and short-term vision for what can a business really do and how much work is it going to take to turn that business over, so that and cash contribution too, to make it, really perform at its highest level, which is something I know you're an expert at.
Yeah.
So, right.
Oh, well, thanks. I appreciate that. Now, in the last minute before we go, this is something that's near and dear to my heart, in terms of informing our viewers, and I'd love for you to give your perspective. What are some of the common investment scams or traps people should avoid?
Oh, wow. That's a good one. The common investment scams. I would say anything that gets you too excited, gets your heart beating really loud, probably is designed to get you feeling that, decisions are made emotionally most of the time, right?
Mhm.
So, for me, anything that's get rich quick is probably not for me. Timeshares generally don't work out. They can be good for families that have a pattern of traveling or things like that and want to invest that way. But I generally would stay away from timeshares. Land banking can be interesting and challenging because you have to understand where you're land banking, because you can get stuck. Another thing I've seen is municipal tax or real estate tax sales. People go in and they go, "Oh, I'm going to make a ton of money buying a property on the tax failure, from the county." But they don't realize a lot, every county has different rules, and a lot of states have 15-year redemption. So you could buy that property off the tax rolls, and 7 years down the road, they come back and go, "Oh, sorry, we're taking our property back now." So you've made zero. There's a lot of complication in investing in mortgage notes and land banking and these things. You really have to be an expert or align yourself with an expert if you want to invest in those areas. Otherwise, for most people, I'd say skip it.
Well, I have true, boy, let me tell you, Kirk, I have thoroughly enjoyed this conversation. And I know you have left my audience with some nuggets that they can use. And I can't thank you enough for being on the show. Thank you so much for all your wisdom and knowledge.
Thanks, Vicki. Great to be here.
Well, thank you so much. And let me tell you, audience, I hope you will go back and listen if you missed any part of this. Thank you so much for joining the show of Ignite, where we keep the fire burning. See you until next time.
This has been a Now Media Networks feature presentation. All rights reserved.